Can I have the next one? The next slide, that's where you indicate all your key members, your team members of the business. So in this section, you have to include a picture of each team member, then what are their roles in the business and their experience. So this is where you include a small bio of each team, a small bio of each team member, and also their qualifications and their roles in the business. Then one of the last slides is where you state how much you are raising or how much you're asking investors to invest in your business. So this is where you state like how much you're raising and in what returns will investors have. So this is where also you indicate whether you are raising your funds through equity or debt. If it's equity, you have to state how much a percentage that you are giving away, or how much return. If it's in debt, you have to indicate like the payment terms that investors will have. And also this section, you have to indicate what the current, how would the money that you are raising be used for? Because a lot of investors always want to know how you intend to use the money that you are raising. Most of the time is the product development. Most of the time is, are you raising the money to extend your product, or you are raising the money to hire extra personnel in your business? So the next slide. So this is just the whole structure that we at GoGetta follow, and we expect every businesses that we deal with that follow, in order for us to get an overview of what your business is all about. Thank you so much.
Okay, thank you so much, Mr. Swale. I hope this nugget of information has been absorbed by our participants, and they will take it forward to use it in future. At this point in time, we would invite all of our registered participants and our guests to pose their questions as we have arrived at our Q&A session. If you have any questions, please do address them. If they are directed to GoGetta, address them to Mr. Tembiso Zwane. If they are directed to Pinaco Co, we have Mr. Lwazi Dlamini and Dr. Charlton in terms of Dr. Charlton for the compliance and legal, Mr. Lwazi Dlamini for the general. Please, over to you, audience. Mr. Sabelo Vilagati, sir, please come through.
Thank you very much for such a great presentations. We think such initiatives are very much needed in our country because entrepreneurship has proven to be the way. I think my question to Pinaco Co will be, as startup founders, how do we contribute towards the data and towards helping them shape their vision, since we see what they're building is what will benefit us? Thank you.
All right, thank you, Sabelo. How you can contribute the data, I will be sharing the link now on the chat, where you can be able to respond to some of the questions that we have asked. I think you saw in my presentation that there are certain areas that you are interested in really finding out about our ecosystem, but the goal is not just building a body of knowledge, but it is connecting the startups to the investment ecosystem as well. So I think as a starting point, it would be the database. And then what also we'll be doing in the next couple of months, we'll be organizing similar webinars, and the next webinar being raising money on the Swatini Stock Exchange, because there is a law that allows SMEs to list, but startups are not aware of that. So it would just be to also participate in some of the initiatives that we come up with, as you have said, that will benefit you. Thank you.
Thank you.
Or maybe just to add, okay, there's a hand from Stambi. So we also have a newsletter on LinkedIn. It's called Eswatini Startup Ecosystem. So that newsletter, it's where we are publishing articles, and we are now working on success stories of entrepreneurs in Eswatini that we will be sharing on that platform. So for you reading, commenting, and resharing those stories, I think it would help to bring to the spotlight what we are doing as Eswatini.
Mr. Stembiso, your hand is raised.
Yes, thank you, Zano. So I think maybe before I ask my question, Sipiwe, do you want to pose your question to everyone, just for some clarity?
Sipiwe? Okay, I think I will read out the question for the benefit of everyone. The question is from Sipiwe. At Mr. Zwane, how do I separate the current financials information from the financials information? I saw that there were separate slides on the pitch deck structure.
Okay, so there are separate slides because one is a financial projection of the future performance of the company, and the other one really talks to what the revenue is going to look like, your revenue forecast, or rather your current cash flow. So what you look like now versus what the business is going to look like going forward. You can group them into one. We just like to separate them so that it's clear and concise for line of sight. I hope that answers your question. And then my hand was actually raised because I had a question for the entrepreneurs in the room, really. And my question to you guys is, what are the pain points that you're experiencing in the Eswatini ecosystem? I'd love to hear your thoughts as entrepreneurs around the room.
Piwa Eswatini, please come through. Piwa, your hand is raised.
Hi, thank you, Zano. Thank you, GoGetta, and also thank you, Pinaco, for this beautiful webinar. I wish more young people were in this space. But to answer the question, what startup businesses are facing in Eswatini is mostly it's funding, and funding is something that is hard for us as young people to obtain. Sorry, startups to obtain. I think mainly because it's because we lack the knowledge on how to present our businesses. And I've heard, and I'm surrounded with a lot of young startups, and most of them, they don't understand the concept of having a business plan. So maybe that's where the problem is with the startups, is they don't understand the whole purpose of having a business plan. For them, they feel like I already have a business of selling potato chips. It's going. I don't understand why then I need to have a business plan for me to get funding. I mean, you can see that I have this business, but I think it's around those lines that, you know, most startups fail to understand that every institution needs to have a plan, especially a long-term plan. So it starts with a business plan where then you can have your future projections to say that, you know, my business in 5 years, I'll need to, renovate such things. Maybe some things you don't anticipate, but obviously due to climate change and people's taste and changes. So obviously then you need to then change your whole business structure. But in Eswatini, startups fail because, or the problems that they're facing is funding. The only funding that we have is mostly loans. And then you find that there's a problem with paying back that loan because that business didn't really do a thorough market analysis. And, then and then you have the competition. As a startup, you have to compete with big guns, and you find yourself really just not making it especially in industries where there are those big brands that people just go to. So in Eswatini we have that problem also, where we have a stereotype market. So if you want to break into that market, you need to, your brand doesn't have to look local. It has to meet the standard of big brands, which as a startup is not something that you can just do uprightly. Like, you need to gradually grow, especially when it comes to packaging. For example, in Eswatini, getting packaging is hard, since most of our packaging comes from South Africa. So it becomes expensive for a startup to have a proper packaging. And with your target market and the stereotype, it becomes very hard. So you find that most startups are at production level than value addition, where there is more money than in production when you look at a startup business. So certainly we are facing funding, competing with big brands because we have a stereotype market. And also just, startups are just so difficult to work with because they don't understand the value of a business plan. And also finding someone, for example, on the financials, it's also a challenge for me to have a business. Yes, I understand the logistics of my business, but I can't do financial projections. So now finding someone to do the whole financial projections, we have difficulties in finding accountants to help us through that whole process. So that is mostly those are the challenges that startups are facing in Eswatini. Thank you.
So Piwa, thank you for that. I mean, that was very insightful. And maybe from what I'm picking up is maybe the startup ecosystem doesn't know what actually goes into a business plan. And it's something that we might have to explore, is that maybe a day or two where you do a workshop, helping people understand what goes into a business plan, And on the financial modeling side or forecasting side, you know your business. So if you are selling potato chips, you know how much oil you need. So you put that down as a cost. That, okay, 5 liters of oil cost me 150 Rand, but that 5 liters can make me 10 kgs of chips, for instance, So the inputs. If you know the inputs, it becomes a lot easier to follow the, how do I put this, the chronological order, basically, of I know what it costs, I know what I get out of this, I know how to do this. But the problem that I've seen or encountered in these various ecosystems is that the entrepreneurs know their business, but they are not willing to write down these things. So start with a piece of paper before you go into an Excel spreadsheet, and then that will help you a lot when you're going to find an accountant or someone who does financial modeling to assist you in that manner. But thank you for that. Duduzi, I can see that you had a question. Would love to answer that as well. The floor is yours.
Okay, thank you. Thank you so much. Can you guys hear me? Am I audible enough?
Yes, you are.
Okay, thank you so much. I think man touches on what Mr. Lamini has raised, to say that, guys, we are subjected to the same requirements as a big business. To say you're basically a startup, you don't have any collateral, you don't have any prior experience, and getting that into your business quite earlier on might be costly. You know, you still have to pay for your business plan, for all the things that are associated with the paperwork, and you may not be able to have raised enough money in-house. So I think Mr. Lamini has elaborated on that, to say the confidence in young people, has it improved over the years? Because, I mean, guys, unemployment is skyrocketing, and some people are forced into entrepreneurship as a way to survive. Some people believe it's their calling. So I think that's the first part regarding Mr. Lamini's question. The second one is that it's a more political one, to say we need to lobby for SMEs in a much broader sense, to say, you know, countries like Rwanda, you find that you have a tax break for small businesses, maybe for 3 years. You know, whether you're importing something, you cannot be subjected to the same kind of tax, VATs and all those kind of things as the big businesses. So I think those are the biggest ones, besides the fact that I'll partially put it on the young people, to say we are not seeking the information enough. You know, we're not hopping onto the platforms that are there. Sometimes it may be because you lack confidence, because when you enter a bank, they tell you that you don't have collateral, you don't have this, you don't have that. They're not even advising you to say, you know, if you can do 1, 2, 3, perhaps you can stand a better chance. You know, and also the investment, the VC landscape in the country. We watch these things on YouTube and online a lot. But I think such platforms like GoGetta, I didn't know they existed before. So I think those platforms need to kind of like really advocate so that young people can come onto that platform. For example, you have JA, Eswatini, to say that, can you guys have maybe some kind of like partnership to say, can you bring the young people that you feel are ready to be taken onto the platform? Well, I'm talking about young people because I believe I am. So these are the challenges we're facing, to say also government through these organizations, we can have those tax breaks to say, okay, guys, you are working on 1, 2, 3, based on the projections that you've given us here. We can be able to at least lower maybe the interest rates or the requirements, so that you can be given a platform to at least walk before you run and fly. So I think I'll stop there for now. Thank you so much.
Thank you so much, Mr. Mlina. That was very, very insightful. Mr. Stembiso?
Yeah, so I can co-echo what Mduduzi is saying, you know, because, but I'll start with the first part. The first part is, I think there's been an increase in confidence of young people running businesses, mainly because of the ecosystem we are now moving into, which is the digital revolution, and, you know, the kind of stuff where things are no longer traditional, where you need the gray hair on your board to make the final decision. You need gray hair for experience, but you don't need gray hair to start a business. And I think there's been an increase in confidence worldwide, actually, in so much as investing in young people. On the second point, I really feel as though, yes, you do need the tax breaks, and yes, it's nice in Rwanda, but we have different problems as different countries, you know, and it's all good and well to rush for the tax break, but there are ways to structure a business so that it runs efficiently in the current confines of the land. So, and that's where we would come in, really, is to really understand and pick the brain of the entrepreneur and understand what we can do, how we can do it, and what path to take to get to the finish line, you know. So what I'm also getting is that in this startup ecosystem, people really, or entrepreneurs rather, are trying to compete with the big guys. Why aren't you building a product that has not been built before? You know, why are you looking to compete with people who are already there? You know, the mentality needs to change to building a disruptive business. So yes, Pure, let's go.
To answer that, I mean, I think as countries, we are different. And coming to Eswatini, I'll tell you one thing, we have a very stereotype market. Like when I say that, I mean, if I come in saying I am producing egg powder, the market won't understand it. And then obviously then now you need to venture out of Eswatini. And when you're venturing out of Eswatini, that's another expense. Talking about, okay, we do have agreements with AGOA, all the other international European Union, but then going out as a startup is something that you are not familiar with and you don't know there are so many regulations to follow, which is something that I think also okay, I can say it depends on the product, but with Eswatini, we have that it's hard to start something new. It is possible. I don't want to lie, it is possible, but it's looking into, obviously you're not going to make much of sales within the country. You have to then think of outside the country. Then also this would be something that as Pinaco Co would have to look at as capacitating export trade. So yeah, thank you.
Thank you so much, Piwa. I do not know, Mr. Zwane, if you had seen Mr. Dumsani Jamini's question in the comments.
Yes, so I think I addressed it in the previous answer because Mpiduzi also had a very similar question. But maybe to just touch on the latter is financial loan requirements will generally be the same from business to business. It depends on what you want to do with the loan. A lot of the guys want security of sorts, but there are also other instruments that you can use, like convertible loans, if they believe in your business or the entity, where I borrow you 100 Rand today and it bears interest at 5%. If you don't hit certain milestones, then it goes into, it becomes equity into your company. And then thereafter, then we can talk about how to leverage that stuff so that I can get my money back at some stage. But usually there's like a moratorium, maybe an 18-month period where you can use those funds. It will accrue interest, but you don't have to pay for the first 18 months. But if you don't hit your milestones, then you have to pay. Those are becoming increasingly popular in the startup ecosystem. And the guys are actually not looking to encumber their assets or put some debt, which is attached to securities. So there are various ways in which you can raise debt as well. It's just a matter of doing the right research around what you want to do with that debt. And the reason really for the collateral is because these guys, they want to raise a whole lot of debt and think that raising debt at high interest rates, you'll be able to make the payments. It's like buying a Rolls Royce when you still have, your business is still running at a pass, you know. So you must look very carefully and think very carefully before you even take the debt. What kind of structures can you use for financing certain of your assets or your business rather?
Thank you so much, Mr. Zwane. Audience, participants, are there any other questions that you have? Okay, I shall assume that there are none. At this point.
Okay, Zano, I do have a question.
Okay.
I'm asking on behalf of our startups.
Okay.
From Mr. Zwane. The question on the evaluation of businesses. I think in the interactions that I've had with various startups, I haven't found one that has really done evaluation of their company. So if we're looking at raising equity funding, so if you were to question what's the value, I think a lot of us would fail that test. So can you just give us, you know, sort of the guidance on how is a company valued? I think this is connected to what Piwa asked, you know, around the financial modeling, the importance of the financial modeling in valuations, company valuations.
Okay, thank you, Mr. Dlamini. Hey, you know, I'm laughing because the issue of valuations is something that I come across every day. We barely ever agree to the same valuation of a business because of various factors. So really, I would urge the entrepreneurs in the room to be realistic with themselves and their businesses. Don't look at your competitor and say, because that business is worth, let's call it 100 million, because they've been running for the last 10 years, your business will be worth 10 million because yours has been running for 1 year. You have to look at what the numbers look like. You have to take into account the cost of capital. You have to take into account the growth of your current economy, where you are operating. You know, there's a few factors that you have to take into account, and also how you plan to grow and scale the business also takes into account. And then also the less debt you have, the better. You know, if you have a lot of debt in your business, the valuation of your company becomes lower. So there are various factors that you need to consider when you're doing your evaluation on the business. But the best thing I would say is come with your valuation. So if you say, I want to give you 10% for 1 million rand, okay? I'm already saying Aibo. Lapo, you haven't even started operating, but you're saying that your business is worth 10 million rand before you even open your doors. There's a problem, you know? So I'd urge people to be very, very realistic with themselves before they come up with their drastic valuations. Also, one thing that I've seen in the market is that entrepreneurs or foreign entrepreneurs, so that's like in Europe and in the US, is they say that in your first funding round, if you're doing equity financing or you're giving away equity, don't give up more than 30% for your first round of funding. So if you're coming to me for your first time, come to me with the business, but don't give me more than 30% or 35% max if we're pushing it, you know, because then you'll have very little value in the next round. If you have to raise more rounds, then you as the entrepreneur will be left with almost nothing when it's time to exit. And we would be sitting with the lion's share of the money, you know, well, of the shares. And then when we sell, we'd be sitting with a lot of money on our hands, and you'll have a lot less, which also demotivates you as the founder of the business who came with the idea to grow this business and scale it and take it to the next level. So evaluations, we will agree, but also do some research around what instruments you can use. If you can't find the right valuation for your business because it's too early stage, you could offer to, there are different instruments you could use. You can go back to the convertible note that I was talking about a bit earlier, or you could look at an instrument called a simple agreement for future equity. It's called a SAFE. And those really allow you to, so basically I'm borrowing you money, and at the next round, if you're raising 10 million rand, then I can convert my 1 million rand at 5% instead of taking 10% on day one. So do yourselves a favor as well. When you are raising capital, is go and look for what instruments can you use to raise that money without giving away a lot of equity or more than 35% equity for your first round of funding. I'm not sure if I've covered all your points, Mr. Dlamini.
Yes, you have. You have excellently explained it. I think also linked to that question is the issue of IP. I think we've received questions around IP. to say that now I'm going to the investor to pitch, and how do I ensure that my idea, as they like to say, my idea is protected?
Sorry, please repeat the IP
So now
questions.
we're talking pitch deck. So I've prepared my pitch deck and then I go to pitch. So maybe let me ask the questions because we've got 3 of them. Okay, so the IP question is, I have prepared my pitch deck. It's ready for me to go pitch in an investor. So how do I ensure that I protect my intellectual property?
Oh,
I think
okay.
that's the first question that was asked. And then the second question that we got is how and where to pitch. The third one that we received is how and where to find investors.
Those
Where
are
do we
lovely
find
questions.
investors? That's what they asked. And then I don't know if you'll answer those or you'd like me to continue
Let
reading
me
the
start with the
others.
first one. The first one was, how do you protect your IP? So generally, you have to sign an NDA before, if you're comfortable. Some VCs or angel networks don't sign an NDA until they've seen your pitch deck because they don't know what they're signing to. You might just have an idea that is in a company that they've invested in already. So the best way to do it is to really, you get your NDA in place, the guys, then you meet, you rather speak to them, and then send your pitch deck for them to have tangible or empirical evidence. And then thereafter, you can take it from there to enter into agreements and then go and share a financial model. Don't share all your information before you've signed an NDA with any entity. Rather send the pitch deck, which is a summary of the business model and doesn't give away too much of your IP. That was the first one. The second one was who to pitch to. So go and make sure that you understand the mandate of the businesses that you are pitching to. So like for me, if you're coming to me or to us rather as GoGetta, and you're coming to us with a debt deal, we're not going to do a debt deal, because we are an equity-based crowdfunding platform. Understand the mandate before you come to us, or then it becomes an easier and a much smoother process for both the entrepreneur and the potential funder. Where do you find money? You can find money everywhere. Money grows on trees in Africa. There's a lot of money that is circulating here in Africa. And you just need to find the person who has the right chemistry with you. So who has the right appetite for your business. It's always good to start with your friends, families, and fools, the triple Fs. And then you start moving on to your external investors, because if they believe in your product, then it shows that there's some sort of investor traction, and the guys would want to jump onto the bandwagon as well.
Okay, thank you so much, Mr. Zwane. Are there any other questions?
Sorry, Zano.
Yes.
So I just wanted to add on to what Mr. Zwane said about how you can, protect your IP. Because
Okay.
aside from signing an NDA, one thing that you can do is actually file for a patent, which will protect your idea or your invention. That's why earlier on, when I was presenting, the pitch deck structure, I emphasized on doing research so that the idea that you have is not on the market at the moment. And if it's an invention from you, then file for a patent, and also a trademark for the logos and also the name of your business. Then another thing, you can also do a copyright of the idea or the business that you want to run. Yeah.
All right. I would assume that at this point in time, there are no more questions from the audience. So okay, we have a new message. Let us check.
No. I was just
Okay,
replying
that's
to
just
Tammy.
Okay. So now I'd like to welcome Dr. Charlton Soso to give the closing remarks for this webinar. Dr. Charlton, over to you.
Great. Thank you very much, Sanu. And yeah, thank you to colleagues who have stayed with us right through. I see the numbers have remained amazing right from the beginning up to now. And yeah, I mean, let me just begin by highlighting something that a study by McKinsey said. An anticipation that by the year 2030, the African startup ecosystem is expected or is anticipated to be contributing up to 2.6 trillion US dollars into the continental GDP. That is by 2030. So when you look at some of these projections, they'll tell you about the highest esteem in which African startups are held in terms of contributing to the African economy from a broader perspective, but also as a way of being able to create jobs on the continent, being able to generate value on the continent, and also, generally just getting Africa to realize its true potential in terms of economic contribution to the global GDP itself. So the consideration of startups in general is at one of its highest times, possibly in the last 20, 30 years, not just in Africa, but globally as well. So you see quite a lot of interest and a lot of investment that has happened around, from government-based funds to private equity to all sorts of resources, even development corporation sort of funds that have gone into supporting the global startup ecosystem. And I mean, the results are very clear to also be seeing. I am saying this just to encourage and motivate us as startups, not just in Africa, but looking at Eswatini. I was looking at the earlier on slides where some of the numbers appeared to be a bit on the lowest side if we're going to be thinking about the 2.6 trillion scheme of things, but you would find, I think Stem said something which I thought was very important and said, this is a journey. So this is not something that we do overnight. This is a journey, and we're really, really privileged that GoGetta, you're collaborating with us, you're sharing experiences with us, and also opening up our minds to possibilities and opportunities as well as we walk on this journey together. And I mean, critical things, I was just listening to the conversations as they were going on as well. Look, if you're going to ask what the typical need of an entrepreneur is, a startup entrepreneur right across the continent, the issues seem to hover around the same issues, issues around funding, issues around capacity, issues around markets. And the extent of this need obviously also just differs as well. And I'm glad that GoGetta was able to illuminate some of this in the submissions that they were making. And I think a lot of good contribution is already going into enhancing our capacity right there. And the scope, also opening our scope around issues of funding. We're very grateful, colleagues from GoGetta. Thank you so much for opening our eyes in that particular direction. And I think this is something that we'd really love to explore a lot more of from the perspective of Eswatini startups. Thank you very much, Stembiso, for the amazing submissions there. Bartholomew, thank you as well for coming in on your presentation with the pitch deck, and also the various other submissions that you're making really around protection of intellectual property. One thing that separates your typical SMEs from the startups is the fact that in the startup space, there's a whole lot more disruptive thinking. There's a whole lot more, trying out of new business models and of consequence, what then comes out of there is the brilliant ideas, the brilliant innovations, the brilliant, inventions that will need to be protected in terms of IP, whether it's through the NDAs, it's whether we're going into copywriting, whether we are moving to trademarking and all of that. And I think this is capacity that needs to continue being reinforced in our entrepreneurs, in our startup entrepreneurs, so that people feel safe, innovators feel comfortable as well to be able to pitch and share, to leverage on their innovation to source for resources. So I thought that was also a very, very critical aspect of the conversation. So just to say thank you much, colleagues. Thank you, everyone who participated in this. This is just the first of a couple more that we're going to be doing. The hope that we have at Pinaco Co over the next couple of months into the next couple of years is to be able to create that conducive space that brings capital, that brings venture capital, and the startups from one end, and we create a space for collaboration, for mutual value creation, much to the advancement of our ecosystem within the country, but also contributing to African and global statistics. And just to end there, by also saying that we appreciate the increasing number of startups that are coming in and joining our database. We want to know what's up. Basically, we want to know the sort of work startups are doing. We want to understand the extent of struggles, the extent of opportunities, what exciting things are going on. So once we have this data, we're able to visualize it. This will help us even as we're beginning to plan, as we're beginning to lobby, as we're going to create also just space to be able to attract capital and innovation into the same space. So I want to encourage young startups, please carry on, just jump onto the database. There'll be a lot of exciting programs like this one that will be coming up in the future, so that we advance as we all are thinking of digging out there and finding that elusive unicorn within Eswatini. So thank you very much, colleagues. Mine is just to appreciate the participation and your forbearance with us as we're going through. And yes, I will throw it right back at you, Zanu. Thank you very much for the opportunity.
Okay, thank you so much, Doc. Again, to bolster the thanks, we are very appreciative of your time, to the presenters and the audience that joined us today. It is an honor and a privilege to have you all here. And as we move forward and have other webinars for information dissemination and improving the landscape for startups, we would like you to continue to support us and join us as we move forward and encourage upward mobility for the startups, entrepreneurs, and individuals who want to engage and break into such a market. At this point in time, I would bid everyone a lovely afternoon, and thank you so much for coming. Thank you.
Thank you for having us. Cheers, guys.
Thank you. Yes.